we trade the currency that is fundamentally bullish against the one that's fundamentally bearish, or we trade a currency that has a current market sentiment that is bullish against one that has a current market sentiment that is bearish. Okay, so that's why the news feed is important. So you go to the news feed and you analyze the current market sentiment for each currency. For example, if you were trading the USD Canadian dollar, and let's say the current market sentiment is bullish for the US and the current market sentiment is bearish for the Canadian dollar, then we would look to enter a trade on the USD Canadian, buying the USD Canadian. Why? Because that's a sentiment trade. We're going to trade one sentiment against the other. Once the sentiment is good for the US, the sentiment is bad for the Canadian dollar, then we're going to trade it. But we're not just going to trade it at any price. We're going to look to enter the market at a good price. So we're going to use our Fibonacci and we're going to look for this level, the 5618 level. That's our kill zone. So we want prices to come back somewhere in that level. Also, we're going to use the 200-day moving average. So trend, moving average, and we're going to use a 200-day moving average. Bingo. See this? So this is a good price to enter the market based on the sentiment. If we know that on May the 18th, the sentiment for the US dollar is strong and the sentiment for the Canadian dollar is bearish, then we're looking to buy the USD CAD at a good price. And a good price is a Fibonacci level or a moving average level or a past resistance level that has become future support. So this right here is a good level to enter the market. So this would be a good fundamental trade. If you were to enter the market here, your stops could have been placed here, which is a 70 pip stop. You would have made 240 pips on the first rally. Okay, so that's a sentiment trade. That's how you can trade based on the current market sentiment and make money. So that's why it's good to have a news feed, because you look at the news feed and then you get an understanding of the current market sentiment. Maybe there's news that Saudi Arabia plans to increase oil production. And if these guys increase oil production, then oil prices are going to fall because there's going to be an excess supply in the market, which is going to decrease prices. Remember, supply and demand. So when there's excess supply, that's going to cause prices to fall. So if these guys decide to increase oil production, then that's a bullish sentiment for the US dollar and a bearish sentiment for the Canadian dollar. Because remember, Canadian dollar has a strong correlation to the price of oil because Canadian economy exports a lot of oil. So if oil prices are going to fall, then we're going to expect the Canadian dollar to fall. So that's an example of a market sentiment trade. If we hear that these guys are planning to increase oil production, then we're looking to buy the USD Canadian for a quick sentiment trade. And that's exactly what you could have done here. We would buy it at a good price, which is a Fibonacci level or a moving average or at a pivot point level. Okay, so we look for a good price to enter the market, and then we can use stuff like candlestick formation, stuff like that to give us a perfect entry.